Okay, thank you, Liz. Right, eligibility and compliance is the next section that I'm planning to talk through. Some of this Ant has already covered, but given that the webinar is being broken up into chunks, I will run through it again. So CBAF is only available to SME businesses, so small and medium-sized enterprises, including sole traders, which are trading in the Cherwell District Council administrative area and have been doing so for at least one full financial year. Okay, so those are the key eligibility criterias. All of your project costs need to be defrayed and claimed by the 31st of January 2023. Okay, so the latest date on which a claim can come in, including all of the expenditure which has been defrayed, so that is paid out of your bank account, is 31st of January 2023. And as Ant said earlier, it's therefore critically important that you're able to cash flow your grant. So you must be able to spend the money before you claim the grant back from OxLEP. And applicants must have attended or watched a recording of the CBAF grant webinar. So those who are on the webinar and make it through to the end can automatically tick that box. In terms of the costs, the minimum grant value is £5,000 and the maximum is £20,000. Those are non-negotiable. The grants, as we said, can fund capital or revenue costs. Match is not required, but it is advantageous. So in other words, it will help your application if some element of contribution from yourselves in the form of match funding is put into the project. Salary costs are not eligible under the grant element, so we cannot reimburse salary costs as part of the grant that we give you. However, it is possible to use salary costs as part of the match funding for a CBAF project. So if you are spending £20,000 on kit or consultancy and your staff are putting in £10,000 worth of their time, then you would have a total project cost of £30,000, £20,000 grant, and £10,000 of match funding. So that's how that would work. I did say that I had a slide on eligible activities, and I'm also very much aware that this is a hugely wordy slide. There is a more detailed version of this available in the guidance notes, but to summarize it, grants can be used for refurbishments. So you can refurbish lab spaces, buildings, plants, machinery, and so on. You can buy things, so you can go out and purchase capital items. You can go out and purchase software or licenses relating to those things. You can go out and buy consultancy. So that can help external consultants or trainers who can support delivery of CBAF priorities, or anything that supports with adopting clean technologies to build back greener. So this could be energy system replacement. So there we are, we have purchasing of a system or refurbishment of a building could be included there, or development of an electric vehicle charging infrastructure. We can also fund training costs. So that relates to training for existing or new staff, and it can be any training, provided it is relevant, of course, that is additional to anything that's a legal requirement. So if there's a legal requirement for a certain level of training in your sector, the grant cannot be used to meet that legal requirement. But if all your staff have met that legal requirement and you're looking to train them above and beyond the legal requirement, that is an eligible cost. As I say, this is given in a lot more detail within the guidance notes, and it's designed to be flexible. We do also, however, have a list of ineligible costs, so the things that the grant cannot cover. We cannot fund working capital for your business. We cannot fund wage subsidy, so no wage costs, as I said, within the grant. We can't cover VAT costs other than where that VAT cannot be recovered, So that could be your VAT status with HMRC means that you can't recover VAT from this type of activity, or if you're a non-VAT registered business, so you can't recover the VAT. It's quite important to mention here that VAT is a complicated area, and OxLEP are not VAT experts, and nor can we give VAT advice. If you're in any doubt about VAT advice, you should seek that advice from your accountant or whoever handles your VAT returns. We can't cover costs that include interest, so paying off debts or refinancing, asset finance or hire purchases. They're not eligible because they would include an interest element, so that's not going to be allowable. You can't purchase financial investments, so no stocks, shares, hedges, etc. And similar to the training point, we can't cover anything that is a statutory or legislative obligation, duty, or requirement. Okay, so if you have to do it by law, by regulation, it's not something that we can fund with CBAF money. We can't use public money to help you meet legal requirements. In terms of ineligible activities, projects that are already underway are not going to be eligible. That relates to the question that we were asked earlier. We can't part fund projects. So I gave the example of a £30,000 project with £20,000 grant and the salary cost of £10,000 as match. That was fine. If you have a project that costs you £30,000, let's say you're buying one piece of kit, costs you £30,000, you ask for a grant of £20,000, you put no match into the project. We are therefore part funding that £30,000 piece of equipment, and that wouldn't be eligible. So there is a gap in the total cost there, so that wouldn't be eligible. Purchase of electric vehicle fleet is not eligible, so we wouldn't cover that. Although, as I said on the previous slide, charging infrastructure would be fine. Building extensions, as opposed to refurbishment, is not going to be eligible, whether or not that requires planning permission. As you would expect, anything that contradicts, duplicates, or undermines government schemes or initiatives is not eligible. I've mentioned the statutory and legislative requirements. And anything that is a like-for-like replacement of obsolete equipment with little or no added value. So if you're replacing something with the same machine that does exactly the same thing, there is no real added value to you. If you're replacing something with a machine that allows you to do more things, different things, and therefore has an impact on your business, that is not a like-for-like replacement. So that has added value with it. So that would be eligible. Essentially, there's four principles that I've pulled out here. No duplication, so don't duplicate anything funded, available, required elsewhere. Nothing that is a statutory or a legal requirement for you to do. No double counting of anything, so nothing that is funded elsewhere. And nothing that requires planning permission. We do not have the time in this programme to fund anything that requires planning permission. Realistically, even anything that has that planning permission, hence the comment on the previous slide. I am now very quickly, you'll be glad to know, going to run through the UK subsidy control requirements relating to the programme, which we've mentioned a couple of times. As Ant said at the beginning, your business must be viable or have a credible plan to return to viability. So the test we're applying there is whether or not your business is a going concern in your latest accounts. And if not, do you have a credible plan to return to viability to become a going concern again? Provided the answer to either of those questions, or both of those questions, is yes, then you need to comply with at least one of the three different elements of the domestic subsidy allowance for COVID-19 business support grants. The first element is a small amount of financial assistance, which basically means you can receive up to €325,000, which is around about £335,000 sterling, of aid over a period of 3 years. So if you've had less than that value in financial assistance, in small value financial assistance, and this includes anything awarded under the de minimis scheme by European projects or prior to the UK's departure from the European Union, then you're eligible to receive the grant under this exemption. If you've used up that allowance, so you're ineligible to receive any more, then you move on to the next allowance, the COVID-19 Business Grant Allowance, which allows you to receive up to a further 1.6 million of support. If you've had that 1.6 million, then you can move on to the COVID-19 Business Grant Special Allowance, and that allows you to access funding up to a further £9 million. So what all that means is that the three allowances combined mean that you as a business would have had to have received more than £12,235,000 of COVID-related business support under this scheme in order to not be eligible for CBAF. So as long as nobody has received that level of support and aid, then you will be eligible under the subsidy control requirements. If in doubt, please drop the team an email and ask. In terms of procurement, we've worked hard to keep this as simple as possible. So businesses may direct award to suppliers for contracts which are less than £100,000 in total, excluding VAT. We would expect supplier selection to be justified, so that comes back to providing the 3 written quotes so that we can see the value for money elements. And in the unlikely event that any supplier cost will exceed £100,000, you should contact the team to discuss your approach before you submit your application. Okay. I think it's quite unlikely that any individual cost procurement supplier is going to exceed the £100,000 threshold for this programme. Given that this is also a capital scheme, capital or revenue, it's highly likely that some of you will be purchasing assets with your grant. We're defining an asset as any item that costs more than £5,000. And essentially what we're requiring from you as a minimum is a copy of your asset register entry. So we would expect that to include the name of the asset and its description, its serial number, where it's kept, the price, when you bought it, what it's used for, who owns it, how you will depreciate it, and the date of depreciation. Okay, it's to make sure that the asset is used for its useful lifetime as expected in the grant approval. It is possible that in some cases we'll need to seek photographic evidence, so pictures of the asset from a sample of assets. This is fairly straightforward. It's a picture of the asset showing where it is and a picture of the serial identification number. If that's going to apply to you, we will let you know that that you've been selected, and then we'll come and ask for the photographs. That's everything I was going to cover on eligibility. So Liz, if there are any questions.
Yeah, we've got 2 questions. The first one's from Jake. Would a commercial vehicle purchase be eligible for the purpose of increasing headcount and upskilling into a new sector?
Yes, he says. We've specifically excluded electric vehicle fleet, but we have not explicitly excluded purchase of a commercial vehicle. So as long as that distinction is recognised, there's nothing in the guidance that says that would be ineligible.
Thank you. And then a question from Alison about if you were making one application, can you include different elements of eligible criteria? For example, some equipment, some consultancy fees, some software.
Yes, absolutely. My only additional comment to a very decisive answer would be that it is always a stronger application if those things fit together. So if it is a single coherent project which involves some consultancy and some capital items and so on, it is always a more difficult sell if there is no relationship between the capital purchase and the revenue costs, for example. But yes, absolutely, you can have a blend of different costs.
That's all for now, James. Thank you.